Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, March 25th, 2009. Well, we're seeing Wall Street actually rally today, at least initially, and there's a couple things I want to talk about in today's video that I think is extremely important, and I can't stress that enough, folks. I really do feel that there's some key things in motion right now, and we have to be fully aware of them. First of all, let's talk a little bit about the charts. You guys see my intraday SPY chart here, and all the key levels in are on the 10-minute intraday SPY. Alright, so you have all my key levels. I'm going to discuss what makes these levels key, why you need to watch them for the rest of the day, and what could the market be brewing for this afternoon's trading session, and maybe even for tomorrow. Now, number one, we have talked about for multiple days a gap fill on the 60-minute chart, actually even on the daily chart you can see it, and it's an extremely key gap fill. It's one that we've been talking about for a long time now, and it finally got filled today. Right here at the top, you see this upper line. This is a gap fill line at 82.70-ish. 82.70-ish, guys, that's gap fill on the charts. I'm going to go to the 60-minute and show you how far back you have to go to see that gap fill, but that's an extremely heavy resistance area, and it worked perfectly today as a shorting opportunity. So we're going to go to the 60-minute chart here, and I'm going to scan all the way back. There it is, guys, right here. All right, and what level is that at? That's at 82.70-ish. All right, so we filled that gap today. This gap got filled right up to here. The gap has been filled. That's a major resistance area and something you have to constantly be watching for on charts. Whether it's your 60-minute, your daily, your monthly, your weekly, your intraday 10-minute, gap fills are always good resistance or support areas depending on which way you go into them. Alright, now let's go back to the intraday charts, guys. And this is an extremely interesting day. Why? Because initially we gapped up in the market. Now we gapped up to the exact same point as yesterday's move. Yesterday we gapped down. Today, look at that line, straight across to the exact print almost to where we opened yesterday. And from that point, you went above that support. So here's support. We moved above it. It was resistance, obviously, because we were below it into the close here. You moved above it. That becomes a recaptured resistance level, now support again. And all of a sudden, you're seeing the market rally. You even went right through yesterday's double top with Monday's double top here. See the double top and the double top, which was great sell pressure yesterday we talked about. And then right up to that gap fill, right up here, guys. Now, the key thing about this, and it's happening as we speak, folks, this trend line right here, and I'm going to show you where I'm getting that trend line from this point down here, all the way up to the pivot low going back to yesterday, is breaking down right now. You're on the 50, you're on that line. If this area breaks right here, look for a move to the secondary point right in this range, right around 80 to 81.30 or so. 81.30 on the spiders, the SPY. All right, but you're on a pivotal point right now. This is support here, but it looks like it's beginning to downtick. All right, in addition, there's something I'm going to show you on Goldman Sachs' chart, which I want to show you very quickly here, and then we'll go back to this chart that I think is extremely key. Right now, this is a head and shoulder, all right, possible breakdown on Goldman happening possibly now. They could still save this intraday, so keep in mind that, but if this breaks, you could see a move to the next support line, which would be a minimum move of this line here, which is the low of the day from this morning, and even possibly as low as the 200 moving average, back to around 105. Now, a lot of you may not be able to see the head and shoulder, so I got to scan back a little bit. All right, here's a shoulder. All right, here's your head up here, and there's the rest of your head down to here, and let me draw that in. So there's your head, and your other shoulder is right here, all right, which is exactly what we're making right now, and I'll scan back so you can see the full effect of it right here. Now, again, this is the neckline. You're taking it basically from the neckline here to the low here. That gives you your breakdown possibility in this market. All right, I want to stress that. So Goldman's on a pivotal point. The SPY, and I'm going to go back to the intraday, SPY is on a pivotal point as well. And look at the 50 moving average here in white, the 20 in yellow, and this trend line scanning right up here. The 50 moving average and this trend line are right here. So this is a pivotal point right now, and Goldman's at a pivotal point in the charts that is telling you if Goldman breaks and the market breaks here, you should see a nice sell-off this afternoon. Now, it's going to be an interesting day, guys. There's a lot of, there's some positive things. We got durable goods orders today. They came in better than expected, but the fact of the matter is that the market at this point is up 20+% from the lows, and at this point, we'll have to see exactly what happens, but the markets are near-term overbought. I mean, they are. It's just a fact of the matter. All right, so keep an eye on that factor as well. In addition, one of the European presidents from the European Union president said that the Obama's budget that he's trying to put through in his economic plan is a road to hell. Those were his exact words, guys. Unbelievable quotes coming out of some of Europe, from Europe, over what the U.S. is trying to do here, the government trying to do, spending trillions and trillions and trillions of dollars to try and patch up this wound. All right, now ultimately, you guys know how we feel here. Right now we just trade and make money. We honestly don't care about the long-term goal because we'll try and trade it. Although, having said that, we have to realize that there's going to be a major hyperinflation issue a couple years down the road, and the fact is you're going to have to see the Fed be ahead of the curve on that, and we've never seen the Federal Reserve be ahead of any curve before. So, having said that, I would just be very, very cautious understanding what the long-term problems that could arise. Okay, guys, a couple more things here. So again, you can see the gap up was right to that same level that we opened yesterday. In addition, see this pivot point right here where we made a bear flag before we broke down? Again, here's your bear flag from yesterday. We called this beautifully in the chat room, bear flag before the breakdown. You gapped right up into that same level, and you kind of stalled out right on the 50, which is right in that same range. And then once you got above that 50, you really started to move higher and fast. And this was a beautiful buy program that came in, a big, big push. You got up to this area right up here, guys. Again, this is the major gap. This is the big thing that we've been watching for. It happened today and was a great shorting opportunity. I did pick up some FAZ there, which is 3 times short the financials, and made a nice change on it. I think I bought at 18.45 and sold at 20.05 for a beautiful scalp on the pullback off that level using the financials as that gauge. All right, so continued there. Folks, just watch this. We're starting to break lower here. And again, I just called this out a little while ago and said if this breaks, you could see a big sell-off. Now, we haven't officially closed below it. If we do close below it, I want to see confirmation. But this is big, folks. I can't stress this enough. This is very, very big in this market. In my book, I wouldn't be surprised if we break this level and the market closes flat to lower today. All right, now again, there's going to be a lot of support. There's a big, big support area right down here around 81.30, and then ultimately you'd have to go all the way down here to be flat on the day, which would be around $80.50, $80.60, right around that area. But nonetheless, to me, this is a very important part because Goldman Sachs is coordinating that. Here's Goldman, and guys, this is technically a breakdown. There it is. So going back to the Goldman intraday chart, you guys are watching this live. This is a head and shoulder breakdown. First target would be this point right here. It's almost there right now at around 108.50, which is the low of the day today. If it breaks that, you could see this trade much, much lower on the day, possibly down to 105. So keep a close eye on this. Goldman down $2 now on the day and showing weakness. And there it is. First target getting hit, folks. First target getting hit at right around 108.50 here on Goldman Sachs. So there's your proof in the pudding about what we do, folks, and about using price, pattern, time, and technical trendline analysis. And before we end this video, guys, I just want to show you a couple other things, but first tell you how important, I can't stress enough, it's a very little known art out there, this trendline analysis techniques, the price, pattern, and timing. All right, very few technicians know it out there. Very few, even less in the mutual fund and trading and hedge fund industry out there. We teach it to you, and we give guidance, this type of guidance on the daily charts, the weekly charts, the intraday charts, in our nightly videos, our daily market reports, and everything. So very important. Come to inthemoneystocks.com and sign up for the Research Center. It is amazing stuff there. Absolutely amazing. The Pro Trader watch list is in there. The daily, nightly market reports, the videos. We have a technical tactic. We have a hidden gems. And by the way, the hidden gems for this month, there were 3 of them. 2 of them have already hit the targets. One was U.S. Steel from 17.50 to 25. Got to 25 and change today. And the other one was NGAS, NGAS, which was called out at 95 cents at the beginning of March and went to $1.40 today as a high. So again, both targets there got hit, 2 of 3 right there. The other one is positive, but not up nearly as much as these. These are the 2 highlights there. Alrighty, guys, that's enough for today. Continue to watch it. Let's go back to the SPY chart here. You can see it's still on the hinge. This is telling me that this candle needs to close below and then confirm. You need to break that low, but it's on the hinge of this breakdown, folks. And you want to watch Goldman Sachs as well. First target on Goldman. This is Goldman's chart. Look at how that first target got hit, and you're getting a bounce off of it. All right, you got to understand your price, pattern, time, and levels in your charts. It is so, so important. Have a wonderful day, guys. Hope to have you in our Research Center soon. Take care and talk to you tomorrow.